Hello and welcome to another Crypto CFOs Presents Watercooler Wednesday. We are today talking about Bitcoin and its kind of transition into beyond a store of value into more of a DeFi blockchain as well. Which, me coming from when I initially got into the industry, I was looking at I had heard about Bitcoin in 2013. When I was at PwC, some of the people there were talking about it, but I didn't really have a ton of. I guess I didn't have that epiphany moment until I learned more about Ethereum and smart contracts and things like that. And when I heard about those, it really kind of flipped the switch for me. That made me understand how revolutionary smart contracts were. And so, in my own mind, I have to admit, like, I haven't thought of Bitcoin as that sort of blockchain, and so. In the coming about 2 weeks ago, I was talking about Bitcoin with someone, and I caught myself saying, oh, Bitcoin doesn't have smart contracts, which was true, but it's not true anymore. And so I took that kind of conversation and I internalized it, and I was like, okay, I really need to dive deeper on this. So I say all that to say that every client that I've worked with has been primarily on EVM chains, so it's Ethereum virtual machine chains, so focus more on the Ethereum side, smart contracts, via that, Polygon, Binance Smart Chain, that type of stuff. And where I did see payments go out in Bitcoin, it wasn't like the primary chain that was being used in the companies that I've worked with so far. And so I suspect that that's going to change more now that Bitcoin is adopting this, because as we all know, Bitcoin is king. And I think that, some of these upgrades, they have a profound effect on the network, and I think we're seeing a lot of adoption with Ordinals, NFTs, and things like that. So I kind of wanted to do a deep dive into this, but I'm by no means not an expert on Bitcoin smart contracts and those types of things. So if anyone has expertise on this that is on the call that wants to correct me or jump in and discuss things, please jump in, because I'm newer to this stuff as well. So what kind of kicked off the smart contracts on Bitcoin was the Taproot upgrade that happened all the way back in November 2021. So literally right at the peak. And this was a huge milestone for the network because it allowed new capabilities for it. There was additional efficiency, privacy, and flexibility with transactions. And, some of the kind of more cryptographic or developer focused upgrades were like Schnorr signatures, Merkleized abstract syntax trees. So like some complex stuff to do with signing and aggregating multiple signatures, reducing the block space that these signatures take up. But a really cool upgrade that happened during the Taproot upgrade was TapScript, which upgraded Bitcoin scripting language to make it easier to deploy smart contracts and support similar to ERC-20 tokens on the Bitcoin blockchain, as well as decentralized apps and things like that. So it launched its mainnet in 2023, and as a result, we had Taproot Assets evolving. So we have asset issuance on chain. So this allows for the creation and management of digital assets, including tokens and NFTs, using the security of Bitcoin's network. So as we know, Bitcoin is the most secure network on the planet, just because of its size and the cost of the compute power that it would take in order to overtake the network. So, hey, Lourdes, just to catch you up, we're just kind of giving an intro to the Taproot upgrade and kind of what's happening there. So welcome. And Lourdes, if you have anything you want to add, feel free to just jump in at any point. So additionally, Taproot integrates with the Lightning Network. So Taproot Assets utilize Bitcoin's Lightning Network to facilitate quicker and more efficient asset transfers. So we're leveraging that layer 2 as well. And then on top of then the kind of next development here that kind of added to Bitcoin's ability to serve more of a DeFi role was Stacks. So Stacks is a layer one blockchain solution designed to bring smart contracts and decentralized apps to Bitcoin. So it sounds a lot like what Taproot did, but Stacks is kind of an evolution of that. So Stacks and the Taproot upgrade are related with their mutual aim to bring enhanced functionality to Bitcoin. But while Taproot improves the efficiency, privacy, and flexibility for Bitcoin transactions through features like the Schnorr signatures that we were talking about before, Stacks builds on this by enabling smart contracts and DApps on Bitcoin. So Taproot kind of laid the groundwork, and Stacks is the kind of the actual piece that implemented this. So with Stacks, we start to see SRC-20 tokens and BRC-20 tokens, which are SRC-20 tokens allow for the creation of digital assets on chain, very similar to what an ERC-20 token does. So this is adding, like, you could imagine having stable coins on the blockchain network now, right? We have DEXs on the blockchain network now because we're able to leverage smart contracts. Additionally, so the key thing here for the difference between BRC-20 and SRC-20, hang on one second. I'm still learning this, so I need just one moment here. But so BRC-20 allows for the creation of fungible assets. And I think SRC-20 does the same thing, but I know that NFTs are able to be created as well. So I think that SRC is just more broad, and BRC is more of like when you can create the actual tokens. So moving on to Ordinals. So Ordinals has been in the news a lot because people have been making tons of money creating these NFTs on the Bitcoin network. NFTs were all the rage back in the last bull cycle. So when they became available on the Bitcoin network, people started launching projects, and the first few ones had a lot of traction because they were historical in the sense that they were the first on the Bitcoin network. So whether they were good or not, a lot of those initial projects made a ton of money because they were kind of capitalizing off the hype of the NFT craze during the last bull cycle. And in this cycle, obviously we were in a bear market when these abilities launched, coming into a bull market now, arguably. But the Ordinals concept allowed for NFTs on the blockchain, on the Bitcoin blockchain. So basically what Ordinals are, as I stated before, they're NFTs on Bitcoin. So they enable the embedding of unique digital content into individual Satoshis. So this can range from a simple text message to complex images and even executable code, which kind of transforms these additional Satoshis, which for those who are not familiar, Satoshis are the smallest divisible unit on the Bitcoin network. So I forget the exact decimal place, but I believe it's like 1/1 millionth of a Bitcoin is a Satoshi. Don't quote me on that, but it's the minimal divisible unit of the Bitcoin blockchain. So Ordinals needed Taproot to happen in order to exist, and so this was all kicked off by the Taproot upgrade last bull cycle. So some of the arguments that have been happening in the community around this are related to kind of the block space dilemma that came up when we had the Bitcoin Cash hard fork. And people, a lot of times when Ordinals first came out, people were arguing against them because they're saying, hey, this is going to clog up block space. It's going to make things, Bitcoin was meant to be a store of value. We don't need it to do these other things. It doesn't need to happen. It just needs to be a store of value. Don't overcomplicate things with smart contracts. And there's other people who are saying, hey, like, we need to be able to compete with the Ethereum blockchain. we believe that every other token outside of or coin outside of Bitcoin is a scam or a shit token. So we want to be able to do that same functionality on the Bitcoin network. And so you had these competing narratives of people who didn't want this to happen because it was, not true to the ethos of Bitcoin, and other people are saying, hey, we're going to get left behind if we don't do this. So obviously we continue to see ordinals gaining in popularity. And I think that you're going to see more functionality roll out on the Bitcoin network just because of the network effect that it has, and the fact that it has it's literally the most secure network on the planet. So I think that you'll see more functionality there. So I kind of just wanted to open the floor. I haven't, like I said, I don't focus on Bitcoin as much, just simply because the clients I've focused on have been all EVM. So while I understand what's going on with Bitcoin, I don't follow on the updates as much as the other blockchains. So if anyone else has any additional expertise on this, I would love to hear from people on the call, or any questions that people might have related to this stuff.
Yeah, for sure. Definitely me. My head is spinning from everything you just said. Hard to even, comprehend it all. And I think that's what everybody in the space is dealing with. When I saw your post and just picking the topic for this week, my first question from my seat was going to be, Bitcoin is traditionally known to have, high transaction costs, low speeds. What is being done, or what has been done to kind of fix that? I mean, if you're looking to compete, then that should be the first thing that needs to be handled. So what has been done to the best of your knowledge?
This leverages the Lightning Network. And so the Lightning Network is like a layer 2 of the Bitcoin network. It resolves back to the Bitcoin network. But the Lightning Network, that was what it was built for. And so it handles transactions a lot more fast and efficiently, and you can pack more data into there. So you don't have the high transaction fees. So it's similar. It's like the equivalent of it's not a perfect analogy, Ethereum to like Polygon, or Ethereum to Arbitrum or Optimism, but just because of the nature of the different blockchains. But it's very similar. You're sending transaction flow off of the main network to reduce the clog, so that you have the ability to transact on it without having the high gas fees. So that's the common trope is that like the Bitcoin network can only handle 7 transactions per second. And while that had been true for a while, with the advent of the Lightning Network, the costs and the throughput of the network increase exponentially.
Okay, makes sense. Then as far as like ordinals, I've done zero research on them as well. Are those just NFTs that are on the Bitcoin like blockchain, or like why is it so significant? Like I don't understand.
Well, yeah. So ordinals was significant because Bitcoin for historically didn't have the ability to utilize smart contracts, and so everything else other than once the Taproot upgrade went live, it allowed for smart contracts. When you open the door to smart contracts, that opens the door to BRC-20 tokens, so like those additional tokens built on the blockchain, because you need a smart contract to deploy those new tokens. And so the smart contract functionality opened the door to BRC-20. You can think of ordinals as like ERC-721 or ERC-1155 assets on the Ethereum chain. They're just the non-fungible version of a token that you can create, but you need smart contracts to launch these new things. And so when Taproot and Stacks went live, it allowed for this functionality to come to fruition. So it's like the reason ordinals is big is because Bitcoin is the largest network in the world. It's the most secure. It's the most well-known digital asset in the space. And so for it to now have NFTs was huge, because people were speculating so much on the NFT market back in 2020, 2021. And so people saw this as an opportunity to be like, oh, wow, I can own a piece of history by owning one of the original Bitcoin ordinals NFTs. And so you saw a ton of speculation around that. Lots of projects, pumping to the moon, maybe for little to no reason. Some of the, there's people who would argue with me on that, but it was just an historical event because it's a functionality that didn't previously exist on the Bitcoin blockchain. And for people who are Bitcoin maxis that only see Bitcoin as the the one and only, king to rule them all. It was like, hey, this is proof why we don't need any other coins, basically. Because without smart contracts, you do still kind of need, at least at this stage in the crypto industry's kind of life cycle, you still need something to interact with USD and other fiat currencies. And so having smart contracts, having the ability to tokenize assets, because when we think about NFTs, we often think of them just as like stupid pictures of like monkeys or like the CryptoPunks, the little pixelated images of people. But what NFTs really are is NFTs are proof of digital ownership. So they're proof of ownership. They're like the most they're the most definite way to prove ownership because it's on the most secure network ever. So when you allow for NFTs on Bitcoin, you also open up the ability to tokenize real world assets now. So if people talk about tokenizing real estate or tokenizing car deeds or digital IDs, when smart contracts are enabled on Bitcoin, it allows Bitcoin to do all of these things that only Ethereum could do or only other smart contract enabled blockchains could do. And so it was really, huge for this because, as I say, the Bitcoin maxis now can say, hey, we don't need any other token to interact with the current financial system. We can have stable coins on the Bitcoin network. We can have digital assets. We can have real world assets. So long-winded explanation, but it really is a huge upgrade for the network.
Makes sense. So if we circle back to tax and accounting for crypto digital assets, does this present any new challenges or any new, is this just kind of the same thing that's happening on every other network? It's similar once it reaches our desks.
So I think that yes and no, it's like the same thing, but the challenge I have with the Bitcoin network is, and I made a post about this on LinkedIn earlier this week, it's one of the most tough block explorers to read as an accountant. So, for me, if I had the choice for a client to never touch Bitcoin and only work on Ethereum, just from an accounting and tax perspective, I'd much prefer that because I can look at Etherscan, I can look at Polygon Scan, BSC Scan, any of those EVM compatible query databases and know exactly what's going on because it's very clear. It shows you what block it was in, but it only shows you information related to your specific transaction. With every single Bitcoin Explorer that I've looked at, like Bitcoin Block Explorer, it'll show you the block and it'll show you all the other data relevant to that block, but it doesn't just parse out your data. It shows you all the other data that was included in that. So if 4 other people sent Bitcoin in varying amounts in that same block, you're going to see all of that and you're going to have to identify your address and look at it there. Now, every tax and accounting pro that's in the space now should be using a subledger if they're working with clients. So it eliminates your need to look at the data in its raw form of that, but you're still going to want to reference back to the query data on chain in certain circumstances when you maybe are trying to investigate what the classification should be of that transaction. So I say all this to say that I find EVM compatible query databases like the blockchain explorers much easier to read. And so that's the only additional challenge I see with this. I think it's also an educational thing because people who have been in the space already, they may think it's just like business as usual with regards to Bitcoin, and they may not, like me, up until, I had been hearing about Ordinals, so I knew in the back of my mind that like smart contracts and all this functionality was coming to Bitcoin, but I still internalize in my own brain that like Bitcoin is just a payments rail and it's just a store of value. And so it's changing that perception of the people who have been in the industry for a little bit longer and maybe don't always interact with Bitcoin to say, okay, we need to consider this a more well-rounded blockchain and consider the possibility that our clients have NFTs on Bitcoin or they have DeFi activity on Bitcoin now. So I think that's the biggest shift. Really, like when you're interacting with a subledger, it's going to be business as usual as long as that subledger has functionality to be able to capture what's happening at the smart contract level with BRC-20 and SRC-20 tokens and things like that.
Gotcha. Interesting. Now, what about like regulatory and compliance stuff? Like how does it impact on that side?
I think it adds clarity because, the Taproot and Stacks upgrade don't add clarity in themselves, but activity, smart contract activity that's shifting to the Bitcoin network. We know now that, well, the SEC has been saying for a while that Bitcoin is the only crypto asset that's not a security, and so that's the only like additional regulatory clarity I think we have here is that like if you're in digital assets and you're only interacting with Bitcoin, you have more clarity around that because you know that you're not transacting in a security. So from a business risk standpoint, if a business wants to take on just solely Bitcoin, I think they have more clarity than if they say, hey, we accept crypto as a whole, we'll accept ETH. And I'm not saying that businesses shouldn't do this, but if you're kind of hesitant to going into digital assets and you want to kind of mitigate that, Bitcoin could be a good option because you at least have regulatory clarity around that, knowing that it's not a security. This upgrade itself doesn't really change things, but the way that regulations have been going in the industry may open the door to more businesses accepting Bitcoin and only Bitcoin. But what do I know? But yeah. So those are the kind of, there's other things that have been kind of happening on the Bitcoin network that have, I think they just launched a DEX on Bitcoin. I forget the name of it. But what's the name of it? Anyways, so I do think you'll see more DeFi happening on Bitcoin. I think you'll see ultimately it is going to cost more to get things done on the network because you're increasing block space. Even if it's getting pushed to a layer 2 like the Lightning Network, it still has an overall impact on the network because there's additional throughput on that network. So you might see gas fees go up. You most likely will see gas fees go up, especially because we've got Brandon just sent the DEX in the chat. So especially because I lost my train of thought. No. What was I saying? Anyways, so we've got a lot of development on here. I think that, just with the ability to interact with, but the potential for stable coins to be on the Bitcoin blockchain is huge too. So those of you who want to check out the DEX that is used for Bitcoin, it's orders.exchange. I think there's many of them. But this one is the first, according to them. So yeah, I think that this also, like, just from a Web3 perspective, now you can connect your wallet, you can sign transactions, things like that with your, which you could do before, but you can interact in a way that feels more like you're using Ethereum, which, I'm not an ETH maxi by any means, but it's just operating in the industry. It's the chain that I have the most familiarity with, because that's what I've seen most people are using. At least from a startup project. And I don't mean just Ethereum, I mean EVM compatible chains. And so that's why when we teach a lot of this stuff, we highlight how to read stuff on Ethereum. And I think, and I hope that there are better solutions coming for the Bitcoin blockchain for a block explorer, because it's a gap in the space that really needs to be addressed. And I think that smart contracts will open up the possibility for that improved data.
Taylor, I have a quick question. Can you hear me okay?
Yeah. Oh, now I can't hear you. Hey, Lourdes.
Can you hear me?
I can, yes.
Are you guys going to offer like a quick class on how to navigate this platform, this orders exchange platform? Because I'm looking at it and my head just exploded. What is this?
Well, so I haven't used it, but I'm assuming it functions very similarly to other DEXs, which are very easy to use. And I will do so part of the trip around the cryptoverse, we do show how to use Uniswap, and I'm not saying, because I haven't used orders exchange yet, but I'm assuming it functions very similarly, where there are, because it has smart contracts and it leverages, I'm assuming, automated market maker technology within the DEX. there's going to be liquidity pools and you're going to interact with them in a similar way. So you put in the asset that you want to sell, put in the asset that you want to buy. Those are going to be BRC-20 tokens. And then it'll give you, based on how much you want to sell, it'll tell you how much you will get, and there will be a slippage or a range of which you'll get with relationship to that asset, and then you choose to press execute or not. I'm guessing that that's going to be how it functions, because that's how all of these decentralized exchanges function is via an automated market maker of some type, and they have different nuances based on where you're providing liquidity to. Like, you have liquidity bands, so you could provide liquidity just to a certain price range, and you'll get more of the fees related to that because you're concentrating your liquidity, so it goes further. It's the depth of your liquidity goes 5 to 10 times further, depending on how thin of a band you're operating in and what asset pools you're considering. So a bit beyond the scope of this discussion, but as part of the Trip Around the Cryptoverse course that we have in the community, there is a section in there on DEXs. And I'm assuming that the functionality for Bitcoin is going to be almost exactly the same as for the other smart contract enabled blockchains.
I'm glad you mentioned the Trip Around the Cryptoverse, because I'm going to have to check your recording out again to get a refresher.
Yeah.
Is that what it's called, the Trip Around the Cryptoverse?
Yeah, and it's one of the courses. Okay. It's one of the courses in the community itself. You can watch the replay of it. You won't get the CPE on the replay, but it's broken into 7 different sections, and I think section 2 is where you'll find they're all labeled with what they contain, but I think section 2 is where you find the DEX stuff. So really good to review that stuff, and I think there's a transcript in there as well.
Yeah, we're also
I appreciate that.
We're also running it during the conference, so that'll be Wednesday the 21st at 10 a.m. Eastern. So you can actually watch it and get the CPE for it. So that's a 3-hour, 3 CPE course. So that'll be Wednesday morning.
Thank you, guys. I did attend your 3-hour course, but I need a refresher.
Yeah, there's a lot of info in there, so it's good that you can re-access it. Cool. Has anyone on the call used the orders exchange, the Bitcoin DEX?
I don't know.
I'm gonna have to do an experiment later today.
It looks pretty remarkable. And Taylor, it's great to reconnect everyone. My name is Chris. I'm with a company called Bitwave. And I spoke with, her name is Electra Frost at Electrify yesterday. And she's really involved in the Stacks ecosystem. Mm-hmm. She's part of, I think, the foundation out there. She's actually created a startup to really promote growth within Bitcoin layer 2s. And this is fascinating. It looks like with the orders exchange, just to confirm, that is basically a DEX built on the Bitcoin. Is it a Bitcoin layer 2? Is it on the Stacks network?
I believe it's a Stacks. Thing. So we had Taproot that enabled it changed the scripting language to be able to allow for smart contracts, and then Stacks kind of built upon that and actually allowed for the actual launching of smart contracts. So I believe it is, I think Stacks is technically a layer 1 solution, but it is on Stacks from what I understand. And I started this conversation, Bitcoin is my probably second, I'm not as familiar with the Bitcoin network and the updates that have happened over the last year or so. That's why I wanted to do this call, is to really get myself up to speed on this stuff. So my familiarity isn't crazy deep on this, so take everything that I say with a grain of salt. But I do know that basically the enabling of smart contracts allows for pretty much any of the functionality that exists on the Ethereum chain is now available on Bitcoin. And so when we do look at DEXs, they all operate, they're basically all clones of each other, and they use liquidity pools and basically a simple math function of what's in the numerator, what's in the denominator. As assets come out of the numerator, it automatically adjusts the price because the math is falling into line in real time. So you can actually map out what a liquidity pool will do based on different purchases just in an Excel doc. Very simply, I can share the method for that that I was using when I was first understanding this stuff back in 2021. But yeah, it really opens the door for things. And the orders exchange, I'm guessing, I haven't used it, but it most likely works almost exactly like Uniswap does. But yeah, good to see you again, Chris.
Yeah, it's great to connect. I just dropped a link. It looks like, yeah, there's numerous tokens, projects being built on stacks. Makes me think, if the orders exchange will provide us with, liquidity, or at least the ability to, tap into, this growing ecosystem here.
Yeah, and I actually I've had quite a few calls with Electra. I want to get her to speak at our upcoming conference, because we'll then have some more content from that side of the world. We're a 24-hour conference coming up in a couple of weeks, but we don't have anyone from Australia yet. So it would be great to get her to talk about that stuff, because I do know she's doing a lot. She's a Bitcoin maxi. She's big on that stuff. So we need an expert like her to speak to some of this stuff in more depth. But yeah, it's great to have her a part of the community as well.
Sounds good.
Cool. Well, did anyone else have any questions or comments on this stuff?
No, it's definitely a good conversation. A lot to learn.
I need to dive deeper, and I need to get my hands dirty with the smart contracts. It's it's an interesting time in Bitcoin land for sure. We'll see what happens with the halving as well. See if the block space dilemma gets rekindled. But yeah, it's interesting living in Uvita here as well, because we are known as the Bitcoin jungle in this small little town in Costa Rica, and a lot of the guys who run a lot of the events just in our town, and they started up a wallet to connect the vendors with their banks here. A lot of them are like hardcore maxis, and they call like anything other than Bitcoin a shitcoin basically. And I'm interested to get their take on these new developments, because I haven't talked to them since Ordinals and all that stuff has really rolled out. And I'm interested to hear from the Bitcoin maxis as to how they feel about this stuff, because I think there's two different camps. There's people who are like, we need this evolution to be able to stay competitive with the other tokens and to eliminate the need for other tokens. And then other people are like, oh, it's just going to clog up the use case of Bitcoin. It's beautiful. It's just a store of value. It's digital gold. And so I'll have to get one of those guys on a podcast interview to hear what they have to say about it. But anyways,
I think that's what confuses me about the whole thing. Not to circle back around, but it's just like Bitcoin had a certain purpose and a certain place in the space. And it's like even when you say like we need to compete or we need to eliminate other tokens, it was like Bitcoin was serving a certain purpose and is serving a certain purpose. So I'm just not. That's where my disconnect comes from. So
yeah, I don't know, Zach. Do you have any? I saw you just join. I didn't know if you have any thoughts on this. I know that you're up on this.
I was kind of just lurking in the background, and I was just reading a report from Delphi last week, just like on really like why Ordinals is influential in the sense of like NFTs and metadata. So, but I would just kind of ask the question, why, like, especially with the switch from Ethereum to Solana to Sui and all these other alternative layer ones, do you think there actually will be enough critical mass coming over from those other chains getting back onto Bitcoin? Because I think a lot of those reasons that people are moving, when you think about faster transaction speed, transactions, it seems like to be the main theme. Like, what would be that drawing force to bring some of that liquidity onto Bitcoin for DeFi specifically?
I think it would be regulatory, honestly. Like if you have I'll use the example of the broker regs that were proposed. If those got rolled out as is, it would effectively shut US citizens out of participating in DeFi just because of the requirements that all of these companies would have. And if you shift stuff to Bitcoin, Bitcoin is better. Like the Ethereum network at one point was like 70% OFAC compliant. So, the decentralization comes into question. But with Bitcoin, that decentralization, I think if the narrative comes and highlights more on decentralization and security, I think those projects will shift towards Bitcoin. But when you're talking about speed and functionality, like something like Solana is super fast, but it's super centralized. So you can do things really cheaply and really like effectively on Solana, but it's a centralized network. So there are risks that come with that. So I think it's going to be a choice between, security and decentralization versus kind of agility in the market. So I don't think that ordinals and smart contracts coming to Bitcoin is going to like negate the need for a chain like Ethereum, especially. I think Ethereum will be king of smart contracts and the EVM, the Ethereum virtual machine. But then you have legitimate projects like Solana that, is great. It's fast, but it just had 5 hours of downtime. Bitcoin has never had downtime. And so when you look at, I think companies and projects will analyze all of these things and choose the blockchain that fits them best. I don't see people flocking to Bitcoin though, unless there's some major black swan event with regulation or something like that.
I do think maybe, for Zach's point, maybe Web 2 operations or investors coming in, because I'm always the one who says like the grandfather test, and my grandfather just lumps everything in as Bitcoin. Our entire industry is just Bitcoin. There's nothing else going on. It's just Bitcoin. So if you're somewhat in that vein, or you've been kind of waiting on it at a tipping point, and now you're getting this ability, maybe that inherent trust or just the lack of understanding might drive more people into that space. So maybe it's not bringing people back to Bitcoin, but bringing new people in to the Bitcoin and Lightning Network. That could be something that might spark some interest. Yeah,
and I think that the notion of the people who want the regulatory clarity, and maybe like you're saying, the grandfather test, they've heard about Bitcoin and they see Bitcoin as legitimate, but they're like, oh, I don't know about these other cryptos, it's a household name. So I think that you'll get the draw from the people that are like the late adopters and things like that. But it's definitely, as of right now, it's not the most efficient or the most like user-friendly smart contract blockchain. We've had these others that have been battle tested. So there also requires a lot of consensus, and there's a lot of infighting in the Bitcoin network is very tribal. You have these different factions of people who adamantly believe, they have like their deep-rooted picture of what Bitcoin should be, and then there's other people. So you might see resistance in the evolution of what's offered via these smart contracts. With the Ethereum network, you see advancements like we got the Denkun upgrade coming out soon, which is going to allow for proto-dank sharding, which is beyond my scope of understanding, but it effectively allows for the scaling and the scalability of the network to increase by hundreds of X, because the throughput of the network gets better with these things. So implementing updates like that, I think, is going to be harder on the Bitcoin network, just because of the consensus needed.
Gotcha.
Yeah.
Now,
anyway,
my last question: what about current subledgers? Maybe Chris can speak to Bitwave specifically, but is there any hurdles at the moment, or are they able to gather all the transactions and all this stuff in just like any other network, or is it
right? Yep. Happy to comment. So at least from a Bitwave perspective, as long as we have an integration to a specific blockchain, we have an integration to the Bitcoin blockchain, of course, same with Stacks, we'll be able to capture transactions that are relevant to DeFi activity. Okay. One thing to just be mindful of is when you enter a specific DeFi protocol, do you want to maintain that original cost basis of the token that you're entering? That's one thing to be mindful of. That's something to discuss with your CPA. I know that our software will allow you to maintain that original cost basis, but that's where the gray area is. Based upon jurisdiction requirement and regulation, is that transaction subject to capital gains or not?
Yeah, this is something that is huge in the industry right now. Like the idea of wrapping assets. So now there's an ability to wrap assets on the Bitcoin network. So that kind of conversation will get resparked. I am of the opinion, and this is not advice to anyone specifically on their situation, but I'm of the opinion that wrapping an asset is adding utility to it. It's not changing the form of that asset. It's not disposing of it. You're really just adding utility to be able. It's like when you deposit cash in the bank to be able to send it as an ACH, right? You didn't change the cash. You didn't sell. I mean, it's cash still, so it's a different type of asset, but you're not changing anything about the inherent nature of it. All you're doing is adding utility to be able to send it digitally across the world. It's going to be slow because it's ACH, but you're at least adding that utility. So I think that obviously my opinion doesn't settle the score on this, but I think that, the ability to, that's great. It's great that you guys have that feature because, giving the accountants the ability to take something that's gray and take a position on it, with some sort of, justification of that position is key.
Also, on that note too, in terms of how you want to value those assets on your balance sheet, with FASB, you want to be able to, of course, mark to market, but there's certain assets that may fall outside of what you have to treat at the fair value. There might be, if it's tied to an underlying asset, you may still want to be able to bifurcate that out and reflect that at cost, and it might still be subject to impairment. So you want to make sure that you have that ability to do so.
Yeah. On that same note, those who haven't checked it out yet, check out Stacey Ferris's asset article from the Journal of Accountancy on the digital asset taxonomy. So she outlines kind of what you're alluding to there, Chris, is like basically we have not all digital assets are created equal, right? We know that Bitcoin's not necessarily considered a security, but we also have, fungible, we have non-fungible, we have CBDCs that arguably could be their own section and not really like categorized as a fungible token because they're a separate kind of type of asset. But within each of those trees, you have fungible crypto assets that are stable coins. You have utility tokens. So each of these different subsections of digital assets have their own unique accounting treatment. With NFTs, you could have NFTs that represent real assets, like you're talking about. So it's really just a digital representation of actually, property or land or something like that, which is going to have its own accounting treatment that flows down the line. You could also have single-use NFTs, like in video games or whatever, where you get an NFT that maybe is transferable, but it only has one use. When you use it, it's destroyed, right? So that's going to have a different accounting treatment than another type of NFT. So understanding the different type of accounting treatments based on the actual nature of what's happening in the asset underlying it is huge here too.
Absolutely. I just posted a link to Stacey's article in the chat. And she's also doing a 1-hour CPE webinar on the 20th at 10 a.m. Eastern at the conference. So be sure to jump on that as well.
Yeah. Cool. Any other thoughts? Any other comments?
Great talk. Love it. Love it.
Awesome. Well, thank you guys all for joining. If anyone on your teams want to watch this call afterwards, the recording will be up in the next few days. So all of these recordings are always held in the community for replay with transcripts and everything like that. So if you miss one, feel free to take a look at the historical calls. So anyways, good to see everyone. Have a great week.
Thank you guys.